And now we will jump right into subsession 2, focusing on the future of digital currency. May we now invite the session chairman, Mr. Dilshan Rodrigo, Chief Operating Officer of Hatton National Bank.
Thank you. So let me warmly welcome all of you to this panel discussion on the future of digital currency. We are at the tail end of a highly informative and valuable ABA conference themed Redefining the Future of Banking Through Digital Transformation. The future of digital currency is a fascinating topic and is addressed within the session 4 of the conference under Emerging Trends in Banking and Financial Services, where the FinTech revolution was the preceding session and operating in a post-LIBOR world will be after hours. We heard a very interesting session which was just concluded, and now we are on to this session, and we are extremely fortunate to have 3 experts in this area. Having gone through their profiles on the net and watched some of their videos, I am convinced all of us will gain immensely from this session. My own knowledge on the future of digital currency has improved significantly. And in the last week from my preparations, keen that all of you are able to take away a few insights from this discussion. We have a limited time, 55 minutes, and I will ask each presenter to take 10 minutes each on their presentations, followed by a panel discussion with the audience. I hope at the end of this session, you will have a greater appreciation on the following. A broad understanding of what digital currency is about and its impact on the global financial system, what considerations influence incumbent banks and regulators on digital currency adoption, the opportunities and threats to our banks in the context of the digital transformation journeys. So now let me briefly introduce my expert panel in the order of their presentations. I may not be doing enough justice to keep to their amazing CVs, but we'll keep it lightning short in the interest of time. Dr. Oriol Caudevilla is a highly respected FinTech influencer and leader, recognized as Asian FinTech Speaker of the Year in 2021. Advisor, researcher, lecturer at many universities. I had the privilege of watching a few of his podcast shows titled Digital Tomorrow on YouTube. So he's a very versatile knowledge authority on this subject. I'm sure you'll look forward to hearing him. Then we have second, Mr. Henri Arslanian. He's a co-founder, 9 Blocks Capital Management, crypto hedge fund, host of the Crypto Capsules social media series and the Future of Money podcast. He's a best-selling author of several books, including the Book of Crypto, keynote speaker, educator, university professor, consultant and advisor to government and regulators in this sphere, has over 500,000 LinkedIn followers, and was recently awarded LinkedIn's top voice in finance. And finally, we have John Lee, who is a regional director of Amber Group, which is a Hong Kong-based digital asset trading platform that allows users to buy and sell cryptocurrencies. He also had extensive experience in the last 4 years as an architecture solutions provider, and I have no doubt will give a different perspective to our discussions. So without much ado, let me then invite Oriol to make his presentation. Thank you.
I'm going to keep it short. I'm going to talk for a bit less than 10 minutes about one specific kind of digital currencies, which would be central bank digital currencies, CBDCs. I guess that that my fellow panelists, Henry and John, will discuss cryptocurrencies later, but I'm going to focus now on central bank digital currencies, which per se are not cryptocurrencies, but they are digital currencies. So we need to go to the very beginning. No? I mean, we're talking about central bank money. And central bank money, as you know, is a legal tender issued by a central bank, which represents a liability, a claim against that central bank. So whenever we use a US dollar, euro, Hong Kong dollar, we are using central bank money. So we're taking this like one step forward, and then we're talking about CBDCs, central bank digital currencies, which are those currencies issued by central banks, but digitally. They are programmable money, and they, to some extent, can represent a revolution to the future of money, to the future of payments. Well, I think this is a very broad area that we could cover in hours and hours. Actually, there are right now conferences devoted only to this topic. But well, to make it short, I would say first of all that central bank digital currencies need to have two basic features in order for them to be a CBDC. They need to be issued digitally, and they need to be issued by a central bank. Those are the two main criteria that they need to follow. Then, what are the possible motivations for a central bank to issue a CBDC? I would say that there are many possible motivations, and which one of them is driving each central bank will pretty much depend on each central bank's interests and policies. So we cannot say, for example, that the reason why a certain country launched a CBDC needs to be the same why this other country will launch their own CBDC. Those may differ. I would say that in general, there is a list of possible motivations. We could say that CBDCs are launched by central banks to replace physical banknotes. They may be launched as well for monetary policy purposes to reduce the lower bound on interest rates. They may be launched to promote financial inclusion. They may be launched to fight financial crime much more efficiently. They may be launched for global geopolitical reasons, for technology and innovation purposes. So the list is very wide. And as I said before, the list, the exact motivation why each central bank will launch their CBDC will depend on each central bank's policies and interests, as I said before. Well, I would say, though, this is a general idea, for example, that to me, a CBDC to promote financial inclusion would make much more sense in areas where the amount of unbanked people is much higher. So, for example, let's say that in certain parts of Africa, perhaps India, Pakistan, Bangladesh, Southeast Asia, it would make more sense for a central bank to put their focus on financial inclusion. Whereas I don't know, let's say, for example, in Europe or the US, perhaps the main motivations would be other. I don't know, like making, for example, payments faster or more efficient. So as you can see, CBDCs are an area that offer a wide range of options. No, it's not like a very closed area. I think it's important as well to talk about the idea that CBDCs are not cryptocurrencies per se. And this part is actually very important. There are similarities, of course, but CBDCs are not cryptocurrencies. And I'm emphasizing this because it's actually quite common to hear in the media people referring to CBDCs as a synonym of cryptocurrencies, but they're not actually the same. They're not the same because of many reasons, but I would say that there are one or two basic ones. The first one, which I kind of hinted before, is the idea that CBDCs are launched by a central bank. They are centralized, whereas cryptocurrencies are decentralized. Cryptocurrencies are the flagship of the DeFi movement, the DeFi industry. And this is why the whole rationale behind CBDCs and cryptocurrencies is actually, to some extent, the opposite. One is very centralized, central bank issued, whereas the others are decentralized, very decentralized. They are the paradigm of decentralization. So as you can see, that the rationale is completely different. Aside from that, well, one more possible difference of many would be that of why they have been used or how they can be used. I mean, we all know that cryptocurrencies can be used, of course, for making payments, but I would say that thus far, perhaps the main use that people have made of cryptocurrencies has been that of trading. People buy and sell cryptocurrencies for a profit or trying to get a profit. And in some cases, of course, they can be used for making payments. But I would say that perhaps the trading aspect has beaten the payments one. I mean, in general, no, I know this is a wide generalization, but I would say that's the idea. Whereas when it comes to CBDCs, it's going to be a bit different in the sense that people are not going to buy massively CBDCs for trading purposes. But rather than that, people are going to get, for example, their salaries paid in CBDCs. They're going to do their daily transactions in CBDCs. That's replacing our physical cash and our physical coins and notes by a digital version of it. But it doesn't necessarily imply this idea of trading that cryptocurrencies have that embedded in them. So this is why I would say that because of the rationale, because of their main use and because of other reasons that I'm not going to cover now, I would say that CBDCs are not cryptocurrencies at all. However, there is one area of cryptocurrencies, or one kind of cryptocurrencies, that actually overlap with CBDCs, and that kind of cryptocurrencies is stable coins. As you all know, I mean, within the very vast area of cryptocurrencies, there's one kind of cryptocurrency called stable coins, which are those whose value is pegged to that of a commodity or a fiat currency. Most stable coins are pegged to the US dollar. Their value is pegged to the USD. So it is in that area where there is a clear overlap between CBDCs and cryptocurrencies. So even though not being the same, their use, their rationale is actually more similar in that case. Nevertheless, I would say two things in here. First of all, even if the use of stable coins is more similar, to put it some way, to that of CBDCs than the rest of cryptocurrencies, stable coins are not issued by central banks, and that part is important. So no matter what the use of stable coins is, they are not issued by a central bank, and that still makes them different to CBDCs. But still, of course, it's not an easy topic, and I think that, of course, CBDCs and stable coins can coexist. But still, it's a tricky area. I was recently chairing a paper at Digital Euro Association where we precisely analyzed what the future of stablecoins in Europe might look like, how they should be regulated. It's available online, so if any of you wants to check it, just let me know, because we dig much deeper on that topic in that report. And before wrapping up my short speech, I just wanted to provide you with two more ideas. First of all, this idea of the future of payment, the future of money. I would say that I know that many people say that CBDCs were created to kind of destroy cryptocurrencies or replace them. Well, I mean, no one knows what was in the mind of the first person who maybe worked on a CBDC. But the thing is, I would say that this is not true nowadays, or not entirely true. I think and I foresee a future where CBDCs will perfectly coexist with cryptocurrencies if a country wants them to do so. I mean, of course, there are countries that are being much more crypto-friendly than others. Some have, for example, banned cryptocurrencies whilst working on CBDCs. But the idea is that, in theory, it is perfectly possible for a country to work on their own CBDC, promote this CBDC, whilst at the same time regulating virtual assets, cryptocurrencies, and allowing them to thrive or to exist in their jurisdiction. No, it is not contradictory. It is perfectly possible. People in the future should, and I think will be able to pay by cash if they want to do so, by using CBDCs, by using cryptocurrencies. The future is very diverse, no? So it will all depend on how each country decides to regulate these areas, no? But the possibility is there. The possibility exists, and I don't think one area necessarily kills the other. And the final remarks before finishing, I wanted to talk more about the exact CBDC projects. I'm not going to have time, but just to mention, we normally say that the People's Republic of China is the world's most advanced CBDC. Well, the thing is, China has not been the first country in launching their own CBDC. China has been the first major economy in doing so. Other countries came first. The Bahamas launched their Sand Dollar back in October 2020. Then there was another CBDC by the Bank of the Eastern Caribbean. The Naira in Nigeria last year in September, which had a bumpy ride initially because of technical reasons, but still it was launched last year. So China, we could say, is the most advanced major economy on the CBDC race, to put it this way. But it doesn't mean that China was the first one. And there are many projects in Asia, Europe, that I'm not going to be able to cover right now. But I hope at least that I could provide you with a clear idea of what CBDCs are, what they are not. And now I leave the floor open for Henri and the other panelists.
Fantastic. Can I go on, Dilshan? I'll rock and roll then on that perspective. I'll jump in. So guys, thank you very much, Oriol, for that presentation. Great to have you with us, and thank you for inviting us to talk about our passion of the future of money, which you all at the ABA Summit, an organization that I've been watching for many years. As Dilshan mentioned me as an expert, unfortunately, I tell every audience, if anybody tells you they're an expert, you got to run away. I can tell you, I've been in crypto since 2013. I've been full-time in crypto since 2016. And I can tell you, I have absolutely no idea where this industry will be even 1 month from now, because things are moving so quickly. And today, I just want to cover with you guys, from an ABA audience, 4 topics. Oriol did a great job in covering central bank digital currencies, CBDCs, and stablecoins. I'm going to focus on 4 others that I think are very essential for any ABA member: the entry of institutional players, decentralized finance, NFTs, and Web3. And I'll cover them in really the next couple of minutes. And hopefully this will give you, my goal is to empower you with some of this information. And then you can make your own decision on what the impact could be, not only on your business, but also yourself as in your career and your profession, as well as the P&L and the team that you're driving from that perspective. Well, let's kick it off. First of all, the entry of institutional players. I can tell you, when I started in crypto, it was a very startup scene. Literally, my nickname was Suit Henri, because I used to go to these meetups coming from a bank. I was not only the only guy wearing the suit, I was the only guy wearing pants. And now, obviously, the crypto industry has become very, very institutional from that perspective in many regards. Let me be very clear. If today you're a financial institution and you do not have a digital asset strategy, you're already late. I can tell you right now, the large number of the top financial institutions are already launching some of their crypto strategy, whether it's crypto trading desk, whether it's offering products, whether offering custody, whether it's offering asset management. A lot of the customers, which are on retail banking, on the asset management side, on the commercial banking side, are asking for these services for a couple of reasons. One of them, there's demand from existing clients. Whether it's large corporates or smaller, there's people want to have access to some of these products that are being offered. Second, it's a great revenue opportunity. Unlike other verticals of finance, this is one of the few verticals of finance where actually it's pretty greenfield. Margins are still quite fat, and actually it's a chance to become a dominant player in the space, which is not easily in other verticals if you're selling stocks or doing old school corporate banking or lending from that perspective. And then obviously there's other benefits and things that have been happening. Regulatory clarity. If your general counsel or your chief compliance officer tells you we don't want to do it for compliance reasons, you do me a favor, fire him on the spot. Today, actually, according to Cambridge University, only 5% of regulators do not have somebody working on crypto. I can tell you, as a lawyer, I sit on the advisory boards of many regulators from the SFC. I drafted the regulations for many countries around the world, the Bahamas to many in the Middle East. I can tell you that the average regulator that I speak with is way more knowledgeable in crypto than the average financial services professional. So I think we have to be very honest from that perspective. Even this week, for example, some of the developments we had on the CBDC side that Oriol just mentioned. MAS just announced a pilot on Project Guardian, where we had financial institutions interact with DeFi protocols using layer 2 Ethereum scalability solutions on Polygon. If these words sound unknown to you, this is actually why you should look into crypto. Right? So there's a lot of these developments going on across the financial industry that are very, very interesting from that perspective. Then there's other areas for improvement. For example, tax is one area we still need more clarity. But I mean, overall today, if you're a financial institution and you do not have somebody working on crypto, or you, as part of your roadmap, digital assets is not a place to play, I can tell you right now, you're already late. So again, the first one takeaway on the first thing is the entry of institutional players. Number 2, it's what we are seeing on the world of decentralized finance. So today when you're trading, ironically, Bitcoin is a decentralized currency. Nobody controls it. It's there. However, ironically, many of the trading on crypto happens by centralized platforms like Amber, for example, or many of the others you see. One area is if you're a CEO or leadership team of any financial institution, you need to keep an eye on decentralized finance, which is a delivery of financial services with no centralized intermediary. You'll say, come on, Henri, this is stupid. What kind of services can be offered? Let me tell you, there's asset management, lending, borrowing, even insurance that is offered now in a decentralized way. And as a reminder, there's no financial institution in the middle. It's purely smart contract code. There's no fees, no FX fees, no hidden fees. It's all there, very transparent. Anybody can see. And there's a lot of advantages there. One of them is actually you can take with something we call in the industry composability. It means I can take any DeFi application that I want, mix and match them, and come up with my own offering that I want to the market, which is something that any two financial institutions will never let their offering be ready to others. There's one of the reasons, by the way, we have so much pushback on open banking and open API, because every bank tries to make it as difficult for others, to clients to switch. The reason we don't have KYC utility so far is because banks want often the KYC process to be difficult for the incumbents to actually keep the market share. So this is one of the big reasons we've seen on that perspective, the DeFi. Again, why DeFi is important. This is the delivery of financial service with no intermediaries. And this week was a historic week, where for the first time we had banks like Morgan Stanley, SBI, and DBS here in Singapore, for example, where I'm physically today, was able to actually be able to start trading on DeFi protocols. Number 3 is really what we're seeing on the field of NFTs, non-fungible tokens. Again, what's happening in the world of NFTs is very, very interesting right now. For the first time, an NFT allows you to mathematically prove that a certain asset is unique. That means today there's a lot of layers in the system. You know, as a lawyer, I feel ashamed that we still have conveyancing lawyers whenever you want to buy real estate that tell you that a title is clean, for example. The fact that we're still using certified copies, or people like me have to put a stamp and say, I certify this as true copy, frankly, is unacceptable in an era where we could easily use NFTs to do the same work where we know. The fact that think even stupid things like art, the fact that we go to Sotheby's and Christie's today to be able to prove the provenance, authenticity, when actually I can have a digital asset that is sold that I can sell to Dilshan. Dilshan knows at what price I bought it, when I bought it, and I can sell it to him, and the transaction can happen in 2 seconds without the 30% selling fee of firms like Sotheby's or Christie's. So the big development on NFTs, why this matters, because a lot of the process that we have right now in banking, one of the area, for example, the world of letters of credits, bill of ladings, an industry that has not changed for 150 years, which is unacceptable. How the change is happening so slowly, how many hidden fees are across the system. This in the era of, for example, NFTs, the process can happen very quickly, especially if you can automate the smart contracts that can deal with the process. And also then the number 4, the area of Web3. A lot of developments going on in that space today. As an ecosystem, we're in the era of Web 2. Initially, when the internet was created, we had a Web 1, which is a kind of the yellow pages. I would go online, get my information that I would get in my physical world, on online world. We moved to Web 2, where you have large big tech providers that are controlling everything. The fact that actually somebody like me, as was mentioned, that I have 500,000 followers, my show is #1 on LinkedIn in the world, my podcast is in over 160 countries, but the day LinkedIn doesn't want me, they can cut me off. Twitter doesn't like me, they can cut me off. If it happens to US president, regardless of your political views, it can happen to anybody. And we're seeing that in certain countries in Asia, where if you express certain views, you're cut off from some of the platforms, for example. The beauty of Web3 is that actually we are able to actually have the data that you own belongs to you and you can interact with it. Today, when you're going on YouTube, why are you not getting paid for the time you're spending watching a video? Why, when you're posting content, or somebody like me that posts content on a daily basis for many years, why am I not being compensated for it? So there's going to be a systemic shift happening on a Web3 ecosystem, which is very interesting. And this is happening as we speak. Now, what does that mean for you? There's a lot of things for banks. For example, today we're seeing many financial institutions entered metaverse, for example, where you have the ecosystem of NFTs come in with DeFi, and actually with stablecoins and payments and smart contracts, create whole new ecosystems. We've seen this in video games. I'm sure many of your kids play games like Roblox or actually Call of Duty or any of these video games where you have a lot of digital assets, skins, weapons, games. And now this is moving to actually metaverse platforms in the Web3 ecosystems, which are decentralized, which people can actually buy and hold, can actually trade. And this is going to give rise to many opportunities for banks. How do you conduct payments in the metaverse? Have you thought about it? What if I have a digital piece of land and I want to get a mortgage on it? Are the banks going to be able to offer it? What if there's actually IP violations and I want to go lending and borrowing? There's all these activities that take place. What's happening now? People are going on the DeFi platforms and other crypto platforms are offering the service. But as we move from Web 2.3, Web 3, as financial institutions, as bankers, you need to look at how you're going to evolve into the space and be able to service it. It's very similar to when back in the internet was created. You said, oh, this e-commerce thing, we don't need to be online. Who's going to even go give a credit card on the internet? Oh, come on, it's all drug dealers. Same thing is happening right now in the metaverse. There's literally billions of dollars of transactions taking place on this space on that perspective. So I'll wrap it up here to be on time, Dilshan. But again, the keywords I want to leave you guys with, the industry is becoming very, very institutionalized. There's people like me and many on the call, for example, who come from traditional finance, who are now in crypto. Like, for example, our hedge fund right now, which is very institutional, regulated, operating in best-in-class standards, and actually offering the service to institutional investors coming into space. And the industry is becoming institutionalized. And before I pass it back to you, Dilshan, I think as a leadership in the financial institution, digital assets are here to stay. So the question is, from your perspective, are you in it? What's your strategy and how you want to handle it and how you want to deal with it? And we're happy to address more questions afterwards in the presentation. And Dilshan, I'll pass it back to you.
Thank you, Henri. So that was a very interesting presentation. We heard Oriol setting the stage for this presentation by explaining the distinction between CBDCs and cryptocurrencies and how they can coexist depending on the needs of the country at that moment in time and the state of the development of the country. And also he brought in the discussion of how stable coins are different to the CBDCs. Then we heard Henri coming in and then talking about the 4 key points that were the essence of his presentation. First was the fact that all financial institutions need to have a digital asset strategy. Second is the fact that we need to have the decentralized currency operating on centralized platforms, defined NFTs, and also the fascinating metaverse as the Web3. So that's setting the stage now for the final presentation by John, who will come in now, and then we will have the panel discussion. Thank you.
Thanks for the intro. And first and foremost, thanks for the shout out, Henri, about our institutions and what we do here in this space. I appreciate that. I just want to get into the details on 2 different aspects and topics. One is simply present our firm's thesis and what we represent and what we go about. And the second is to echo a bit on Oriol's presentations on CBDCs, on how stablecoins differs and how we should be present in the digital asset space for acquiring Bitcoin as a Federal Reserve or a bank reserve or your personal reserve in the this current era in uncertainty. So that's my 2 main topic ones. So let's go about it first. Just like Henri said, digital assets is here to stay and it's not going anywhere. So if you either keep up or you're gonna, left behind. And just like any great migrations and great technology transformations, human beings have been transformed since the beginnings of times with mediums of payments, with different exchange of payments, if different mediums. So it's simply natural for us human beings to evolve in this way. From back in the barter system to different shells, to different cows, to bananas, to commodities, metal, precious metals, gold, now to papers, and now to purely digital stuff and even NFTs. So the trajectory and the progress is similar, and the way we see it as the future in the space is for us. We capture and minimize the risk for this assets and this asset class. It's newly, people when coming here to join, it's like a Wild West. People don't know where to start. People don't know how to do it. People don't know how to go about it. Choose your own wallet, whether you say, custodian, use a banking systems, if there is one and regulated in your current country and regions, or simply use a MetaMask or anything that you can just connect on any decentralized apps, any DeFis, any DApps. In the Web3 era. So there's a lot of choices out there, and how do investors and how do everyday Joes or how do even just your grandmas and grandpas can participate in this digital revolutions that's presenting right now, right? So our firm's thesis is simple. We simply believe digital assets and the whole industry and space is gonna keep moving forward, not just towards the institutional aspect, but also towards the whole retail and everyday usage, payments, taxation purposes, payroll systems, accountings, different or even STOs, security tokens in that aspect. So all in the future aspect, there's so many possibilities that you can create on this technology, and it can initiate and it can produce different types of asset classes, different type of values can transact on the internet. That wasn't necessarily done and capable before how Bitcoin released the white paper saying, fixing the double spending problems, fixing how the consensus mechanisms works together, how people can agree on certain things and vote on certain things, purely on the proof of work model or even proof of stake model to keep moving forward. So in that aspect, institutions play a big role in everyday's life, and not just our current roles in the macroeconomy market, but also in the money markets and the retail aspects. So if the money comes in, does pour in, just like we're seeing right now, and inflows and outflows going in and out every day, the transactions volumes going up and down, that's simply just how the market matures and how securities build up and how infrastructure are in place, as opposed to 5 years ago, 8 years ago, even when I entered the Bitcoin network as a validator, as a miner. So the scenes and the environment drastically changed simply because of the institutional adoptions, and like bankers like yourself and a lot of different professionals from different disciplines, legal, even philosophy, social commentary, activism, all the different aspects constitute of this whole wide range of in-matter disciplines integrations. It's like a melting pot, right? So cryptocurrencies as a whole, it's not just a simple base like a technology or economy system model, or a social political system model, or a activism system model. It's all the above. It's pretty much everything that combines that you can push out and for everyone to participate in, right? The true sense of democracy. That's really decentralization. So that really is the thesis and the ethos when Bitcoin first came out, right? And even prior to that, there's a lot of digital monies back in the 90s, back in Silicon Valley, and even when RippleNet was up. So Ripple started out with a lot of digital currencies back in the day, in the early on start as well. So with Bitcoin, it simply act as a gateway to this newly services of industry and space that everyday Joes or people or governments, you can simply participate. Like, it's permissionless. You don't need permission to be joined in the network. You don't need KYC. You don't need certain aspects to be able to be validated. So if you get the means, if you get the hardware, if you get the necessity to join the network, you can. And that's pure democracy to everyone, to anyone that wants to get in the space and to participate, to join the network. And in that sense, it breaks down the financial barriers for a lot of traditional TradeFi and institutions and banking systems that simply just won't service certain areas of people, certain groups of people, certain types of people, no matter the discrimination, no matter the cost or the benefits, things like that. So on that retrospect, it is very fascinating to see how we're gonna move towards this balance scale. It's a tip scale between how you can control with the centralization aspect and how you can decontrol with the decentralization aspect, with the freedom of usage and the freedom to participate in the network and to join this financial system. Well, first and foremost, it is a financial system. So, we agree on that and we're pushing forward to it. But our firm keep building on different things that exist beyond financial systems. So, with the current, a lot of applications in the metaverse or Web3 or GameFi or SocialFi, the application exists beyond simple economy transaction values. It's more interactions, it's more communicative, it's more playful, it's more to the everyday sense of you are joining a community, you are participating within the global internet community. And the internet is the head of state. It is the state that you join and you are the citizens of the internet. So you are participating in that, into this playground, and you transact, you do everything's in there, from your daily payments, from your food and services, from your beverages, from your physical goods, from your everyday, anything you can think of, right? So you build on top of that, and you create different kinds of interesting sections and gateways and subcultures, countercultures, and all the above just melting together in this. And also obviously with the embedded internet inherent culture, right? The meme culture, the things that people nowadays just take it for granted, and they wouldn't be able to do it like 10 years ago or 20 years ago. So on that aspect, Bitcoin as a reserve is simply truthful and valuable for not just everyday, but every people, but for governments and banking systems to adopt. It's some of the the different asset space and different alternative assets you can acquire, based on the current market situations and the conditions that everybody is experiencing, right? And stablecoins, on the other hand, are simply the anchor to a lot of the mediums of exchange to be able to get a place of hedging, get a place of a sense of transaction volumes that governments can agree on. Even governments can acquire private stablecoin issue companies to make it into their own government CBDCs. And that's some of the where some of the regions are heading right now. So whether government issue, central bank issue CBDC is going to be a future, it's going to be a thing or not, like privately issued stablecoins is still, every day is using and it's outflowing, it's going. So the transaction is there, the volume is there, and people are just coming in and out and doing all the things that's currently ongoing right now. So we really do not see a stopping point, whether during bull or bear, whether during the current macro geopolitical situations and whatnot. The scene and the environment and the innovation and the progression is not stopping at all. Yeah. So yeah, that's basically the firm thesis and how we view on Bitcoin and how stablecoins and different other other assets and digital assets can help and do so in the near future. And also presently, if you are joining and if you are participating in the network, you should be getting to know and should be knowing how you can do things differently as opposed to the traditional way of how things should be done. Yeah, so that's our 2 cents, and I think we can move on and get back to you and start the panel.
Just to help in terms of the overall context, and John, you spoke a lot about the trajectory, the evolution of cryptocurrency, and you also use the analogy of a Wild West, where people have to go through a lot of this uncertainty until the full ecosystem stabilizes and we put in place the right kind of balances. And what is the right kind of balances in a true democracy, like you mentioned? So one of the questions that I have immediately would be, cryptocurrencies have lost over 2/3 value this year, and that has been quite a setback, I believe. But is that in line with the evolution you mentioned? And in your opinion, does that in any way impact the outlook that we have for the future of money in terms of the pace at which this evolution is taking place? Or is that a good learning opportunity and lots of things, robust measures have been put in place since then to make the process more effective?
Yeah, it's definitely good learning and it's definitely necessary. It's a healthy, whether you see it as short-term corrections or mid to long-term corrections, it is definitely necessary. Like without that, there's nothing in the assets to just go all the way to the top and just not bouncing back up and going in and out with the different spaces and different participants and validators joining in, right? This simply just doesn't make sense for any other asset classes. And especially for this asset class, for digital assets, it's not been along for a long time as opposed to all the other assets relatively. So in this short amount of time, you can go from where we were, back in like 2010s, kind of the pricing levels up until 2022's pricing levels. It's a staggering amount of change and moving forward, despite whatever drawbacks in current macro situations we're considering and facing right now. And obviously there are a lot of bad actors, bad apples just everywhere, anywhere in the industry. It's not just particular to our industry, in the financial industry or FinTech industry. It's pretty much everywhere. And especially in this industry, something happens, and if it happens, regulators and a lot of infrastructures must be in place to secure and to help mature the space into, I guess, other participants wouldn't be able to otherwise to join, right? Otherwise. So in that regard, it's very healthy and it's very perfect for them and the perfect right timing for them to be able to set up the infrastructure, the right statutory, the right regulatory services and framework for everyone to be able to safely join and participate. And just look at the current, I guess, movements for all the other assets. Like Bitcoin is already decoupling from, S&P 500, for NASDAQ, for all the other, what it was used to be traded as, it's like a tech stock, right? And you can see how it also outperforms within this current month with all the other assets. that's simply just not doing so well. And, you know, no matter the war situations, to political situations, tensions around all the other globe, and gas prices, energy situations, all the other mounting up to the current macro situations right now, considerably, crypto is doing pretty well, you know, like in recent time. So if you go from the all-time high to now the current state of things, whether through bull and bears, the trajectory is clear. It's simply just keep mounting and keep building, and a lot of the new innovations and new protocols and new services are keep pushing out. So things are not looking doom and gloom and grim that way. You know, the environment is evolving, it's maturing, and it is getting packed with a lot of developers and a lot of ecosystems coming in. Yeah.
Thank you. Thanks, John. Maybe a follow-up question to Henri. You know, you mentioned that if a mainstream bank doesn't have a digital asset strategy, they're dead. And so there is no doubt they have to play an active role. But my question is, how does the digital asset strategy complement the digital transformation strategy that each institution has? And I think ABA itself over the last 6 or 7 years has been driving digital transformation as an important discussion topic almost in every conference. And I know that many banks have their digital transformations, if not all. But I don't know to what extent digital asset or digital currency features in that. Any thoughts on that? And maybe you could share a few examples of some case studies of banks that are doing it very well.
Yeah,
complementing the digital transformation with digital assets.
Yeah, first to clarify, I don't mean that a bank is dead because they're not in crypto. I think that's to be very, very clear. I think banking is still very, very profitable with all the legacy banking systems that they're operating today. So I think it's if you don't have a strategy, I think for the future, I think you'll be missing out. But I think you could still banks that do custody and borrowing and lending, and they do very well. And they've been doing it for many years, right? So I think let me just clarify there. I think there's a couple of things. If I was today the CEO of a bank, and in my role at PwC I was a global crypto leader, a partner. I advised many boards and banks over the years. I think there's a couple of things I would do. First of all, the most important is actually being education. Is if you and your chief strategy office and your board are not educated on crypto, I think you're failure immediately, right? At least it's being, you may love Bitcoin, you may hate Bitcoin, you may love crypto, you may hate crypto. I think you have this moral and intellectual obligation to at least understand it. I would even argue fiduciary your obligation to at least understand it. And then being educated, you can make a decision on whether you believe it's the right decision for your business and for the strategy of your bank. And maybe the answer is no. Maybe you said it's not the right strategy, you cannot do it in-house, but at least I think having that time is very important. I can tell you from a time that when I started in crypto, the information was technical, you had to read white papers. Now there's nothing easier than to get information. You know, even my content, my educational content on crypto is in 5 different languages. It's for free. There's online courses. I even have a 90-minute online course where I'm interested on Udemy for financial services professionals, and as well as books and stuff like that. So I think at least spending half an hour, 1 hour to at least understand a bit some of these topics is the most important thing. The second thing is actually within organizations, and having worked in a bank and having worked with many banks, I think one of the challenges that I see is that unfortunately, intrapreneurship is often not encouraged. And often, banks have digital arms. Often, let's face it, it's all for show and tell. It looks good for marketing. It looks good when kids come and visit. You have a department where people are wearing T-shirts. But I think the reality is that unless you have people who are empowered and where failure is actually encouraged, where failure is encouraged. This is what I think, this is, I think, one of the biggest obstacles I see. Unfortunately, a lot of banks where people have been there for 10, 15, 20 years, everybody is quite comfortable. Nobody wants to rock the boat. And the reality is, even with crypto, it's not going to affect your P&L for the next 2-3 years. It's going to be the other guy's problem. So unfortunately, it's one of the big issues that we see today. There's been some organizations that have done this a good job on it. I would say what some of the approaches we've seen is actually some organizations have been investing in digital assets companies. Others have set up a completely different division who's been dealing with crypto. Many of them have done actually quite well. But I would say the most important that comes to all this is the leadership from the top. You know, unless you're able to go and talk to your team about digital assets, and by the way, brother FinTech and other elements, for me, it always makes me laugh when I see CEOs that talk about they want to make their organization digital, but then somebody prints them documents for them to read. Let me not even mention emails and other stuff. I think it just looks very bad. I take one personal example, and I'll leave it on this one, Dilshan, is there's many ways you can do it. What I tell as an executive, why don't you buy for $5 of Bitcoin? Buy, just amount you're happy to lose. Just get to know it, interact with it. For your kids' baptism, for Chinese New Year, for your bar mitzvah, whatever event is coming up, it's a wedding gift. Why don't you give them a little crypto? For your next Christmas party coming up at the office, instead of giving a gift everybody's going to throw away in 5 days, why don't you give them actually some digital assets? It's a good way. It's a great conversation over the cocktail party, but also allows people to actually learn about the asset. I think as long as you start experimenting with it, you see how easy it is to send money from one country to another with crypto, how easy it is to interact with it. I think that's really what's going to set you apart. And then you can lead by example and then drive the organization forward.
Thanks, Henri. So leading by example, making the baby steps, what you're recommending for every organization. And then from there, look at taking it to the next level. So just a question from Oriol, again, a follow-up question. You took a lot of pain explaining the difference between CBDCs, stable coins, and crypto. Just wanted to ask you, I've seen a lot of conspiracy videos circulating on the net that CBDCs can be dangerous with serious invasions of personal freedoms and privacy with ability to trace, freeze, or block your money. Is this a real issue?
Well, actually, that's a very good question, because I would say that probably is like the top one question that people ask me, whenever I talk about CBDCs. And I would say, no, to me, that's not a real issue. As I said before, CBDCs rationale is different from that of cryptocurrencies. This doesn't mean that CBDCs are better or worse than cryptocurrencies. They are simply different. And it doesn't mean either that CBDCs are attacking your personal freedoms or privacy, at least not more than the existing means of payments that we already have in place. I mean, one thing is so clear. Many people complain about the fact that CBDCs will not allow for a full anonymity. That is true. I mean, CBDCs will allow for transactions. I mean, once again, there is no universal case for CBDCs. So it's going to depend on each central bank. But generally speaking, what most central banks will do, what they will do is to make transactions in CBDC private, but not fully anonymous. This applies to the People's Republic of China, to Europe. I mean, for example, Mu Changchun from the PBOC mentioned this idea, that the digital yuan will ensure a limited anonymity. And the idea is that private, yes. Fully anonymous, no. But the thing is, this is not something that comes new with CBDCs. Unless you are paying today using, let's say, cash, and well, even in that case, it's not 100% private, but it's the most private means of payment. The rest of means of payment that we have in place are not completely private. So I'm quite surprised when people say that CBDCs will, to some extent, invade our personal freedoms or invade our privacy, because those mechanisms that could affect our privacy are already in place. They already exist. I mean, for example, whenever we get our salary paid to our bank account, and whenever we decide to make a transaction, we can already have our tax departments, our Inland Revenue Department, or equivalent tax authorities in your countries check what transactions we received, which ones we made for tax purposes, for anti-money laundering purposes. That already exists. That is not something that will come new with CBDCs. So this is why I don't think that CBDCs have been created by any country to attack our personal freedoms. The idea behind CBDCs is different. I mean, of course, that CBDCs can be a much more effective tool when trying to fight financial crime. But I don't think this CBDC versus cryptocurrency race that some people insisted on creating actually implies this idea of privacy versus non-privacy, freedom versus non-freedom. I think it's much more than that. Now, we need to look at the economic value of CBDCs, cryptocurrencies, what we want to obtain with them, for what purpose we want to use them. But I don't think that's such a big issue, even though I know this is a concern for many people. I mean, undoubtedly, it needs to be. Like in the European Union, for example, there was a survey made by the European Central Bank, and the top one concerned by people when it comes to the future digital euro was precisely that one, privacy. So I'm not saying, of course, that this shouldn't be a concern. It's okay for this to be a concern, but I think we don't need to overstate the importance of this area, I would say.
Yeah, I think it's important that that particular fear is allayed in terms of maybe certain controls that are put in place, and give that the impression to the people at large that yesterday I think India issued their own CBDC, the digital rupee. These are big economies, and it's important that that particular issue is addressed full on. One more question before we get to the audience questions. There are a few audience questions that are coming in. How does with digital currencies, particularly moving into the payment space, where you have the money transfers locally, the remittances, basically the transaction banking business, if with the NFTs that Henri spoke about, effectively you can make a very important part of a bank's business become dormant, because this is the digital money taking over your business. And I think you heard a few weeks ago, Jamie Dimon from the US, mentioning the challenge that is coming through on this. Any thoughts on that? I mean, is this really a threat to the banks, a serious threat to the bank's business? I'll open it out to anyone to answer. Henri, you want to have a go?
Sure. Is crypto a threat to the banks? I think it depends on which vertical you're looking at. I mean, let me give you a very simple example. Cross-border payments. The way right now, forget even user experience, which is absolutely terrible when you're trying to send money overseas, from SWIFT number, trying to input it, then obviously the hidden fees, the explicit fees, and frankly, some of the availability. Recently, I was in Hong Kong, was trying to wire money to my young sister in Montreal, Canada. My bank doesn't do FX, international cross-border payments on Sundays. I don't know, maybe my bank goes to church. I don't know. Whereas I can go to stable coins, I can make a payment like this immediately on the spot arrives. I can tell you yesterday, I was supposed to make a payment from my bank account in Dubai to my bank in Hong Kong. The process is so un-user friendly that actually you can do in stable coins immediately on the spot. And by the way, let me alleviate the concern on compliance right now as well, because I think one people say, the reason we have this is for compliance. Let me give you a piece of advice. If you're going to try to do something illegal, launder money, hide money, do some not avoid taxes, do not use crypto. You will 100% be caught. You're way better off using cash or frankly the existing traditional banking system. I think you have to be very careful. All this messaging that we have towards crypto, that actually Bitcoin and stable coins, and it will be the case with CBDCs as well, as Oriol mentioned, there's full traceability. So I think that's one to be very, very careful on that perspective. Crypto is the only industry where when there's a hack, often the hacker has to return the funds. Why? Because fully traceable, all the wallets are identified, we know exactly the money is, and laundering it becomes very, very difficult. You can maybe launder 1 million in a second, 1 million and two there, but it's very difficult to do at the scale level. So I think some areas like cross-border payments, for example, where stable coins are there, they're doing it. And I think that creates a risk, not only for banks, but also central banks. Today, if your central bank, for example, a country like Turkey, where obviously Turkey is one of the biggest growing markets right now for crypto. Why? Because people don't trust central banks. As soon as they have local currency, they immediately change it, even paying a fee to stable coins. Argentina, list goes on and on and on of how people are using it when they don't trust the system, and people have an alternative right now. So I think there's a lot of actually organizations, either if you're not on top of it, or you're not innovating, or there's bad policy making, people have an option. However, and I'll finish it up with this, there's also a lot of opportunities. If like any financial institution, if you're able to actually capture these changes coming up and provide an opportunity, actually leverage it, I think gives a lot of opportunities to many people in the market as well.
It's important point. I mean, but what you're saying is that banks need to watch out. They need to, they could, if they're not innovative, if they're not embracing this technology and also bringing in their own versions of it, they could see their lunch being eaten by other institutional players in this area. So that's a very important point. And maybe the last question would be from the audience, which is how do the central banks keep control of their money supply in the economy and also manage AML? I think you mentioned AML in a digital currency world. I believe if they were to issue CBDCs, how do they actually, with the physical money as well as the digital money, still have a full control over the money supply and manage the financial system?
Well, I can take that one.
Thanks,
Well, when it
Oriol.
comes to monetary policy, this is actually a tricky area. No, that would take us like much more than 2 minutes to cover. I would say, as a general thought, that given that there is no universal case for CBDCs, because each economy is different and each central bank is different, how to exactly tackle this issue will depend on each central bank. One thing, though, that I know that central banks are very worried about when designing CBDCs is that of digital bank runs, preventing those. As you know, whenever there is any crisis, like for example, as we saw in Europe, more specifically in Greece, back in 2009 and 10 with those bank runs, people queuing up for long hours in order to get as much cash as possible from their banks, from their bank accounts. Well, the idea of that happening digitally, I know it sounds sometimes scary for central banks because whenever we introduce a CBDC, it might be possible in theory, to just use your cell phone to get your money back, and therefore there would be no limit to the supply of money that the banks would be giving you, and this could create like a huge mess. And I know this is something that the central banks are keeping in mind whenever designing their own CBDCs. This is something that central bankers from, well, not just from Europe, but from pretty much all across the globe have told me this other idea of preventing digital bank runs.
Thank you, Oriol. I think we are running out of time. I'm going to just wrap up by saying that we had 3 goals for this session at the beginning, which was to understand what digital currency is, the different types, and I saw Oriol explaining that in a lot of detail, and how that impacts the financial system as it is. And then we also talked about how incumbent banks or mainstream banks need to approach digital. And we heard Henri talk about that as an active, needs to be an active player in driving digital and also have their own digital strategy. And finally, the opportunities and threats. We talked about the risks associated with digital currencies and how we manage it, and some of those risks were overblown. So I thought it was a very interesting, extremely interactive session.
And that concludes our second session of today. We are going to take a very short break, and we will see you very soon.